Hi, I'm Jason with Level Up Investing, and today I'm going to talk about Wells Fargo stock. I recently purchased Wells Fargo as part of a shopping spree, and you can see that video. I'll put a link to this up in the corner there, and you can see all the different stocks I purchased, but you can see that one of them was Wells Fargo. So today, I'm going to go over that in a little bit more detail, why I purchased it then, and why I'm continuing to purchase more Wells Fargo. Keep in mind that this video is for educational purposes only. It is not a recommendation in any way of purchasing stock. I wanted to just go ahead and show you my rationale for why I purchased Wells Fargo and some of the numbers that I worked through, but you definitely need to do your own due diligence and make your own decisions when it comes to your own investments. So based on my research, I can tell that there are three major events that are happening that are causing significant decline in the price of Wells Fargo stock. The first thing is the coronavirus fears that are happening right now. The stock market in general is going through a major correction. Some say it's going to be the beginning of a recession. Who knows? But there are definitely decreases in prices on many stocks, and a lot has to do with the coronavirus fears and how it's affecting the economy. People are not flying, they're canceling their flights. Production is decreasing throughout the world because people are not going to work, they're not going to school. So there's a lot of things happening based on the coronavirus fears. So that's a major issue that's causing the stock price to go down. The second major event that's happened to Wells Fargo is all the issues that they are dealing with Congress right now, having to answer to the House Financial Services Committee and the resignation of the chairperson of the board, as well as another board member. This is all in regards to the millions of unauthorized accounts that were opened. So that's been a troubled spot for Wells Fargo for a little while now, and that's another event that's having an effect on their stock price. And if that wasn't enough, the third event is the current oil price war that's happening between a couple of the countries in the world. And what's happened is that Wells Fargo is a major financial source for crude oil, and to the tune of $30 billion on the Wells Fargo books. So there's a lot of concerns with Wells Fargo stock when it comes to the oil price war and the dropping of oil prices. So that's another reason, the third big reason why the Wells Fargo stock has really declined in its price. So why have these issues caused me to go ahead and buy more stock in Wells Fargo at this time? Well, let's look at the graph here when it comes to value investing. So on this graph, I have time here on this x-axis, and I have dollars on this axis, the y-axis. So the first thing to look at is this dark line that comes up in here, diagonal line. This is what's known as the intrinsic value. So if you have a company that's been around for a long time and you reasonably feel that the company is going to continue to be around and has a solid foundation, then you can expect that the value of the company, the true value, the intrinsic value, will go up with time. So that's the intrinsic value. The dotted line represents the margin of safety amount. So you could consider it maybe 50%, 60% of the intrinsic value. This is not drawn to scale, by the way, but you get the idea that this is the intrinsic value here, and the margin of safety amount per stock is more along this line. So what happens is the intrinsic value is different than the stock price. So the stock price fluctuates with the market, as you can see where this line is here. SP is the stock price, which is quite different than the intrinsic value. So as markets go up and down based on business cycles or major events, this would cause this stock price to fluctuate. So every once in a while, if you're patient enough and you're a value investor, you'll see the stock price not just dip below the intrinsic value, but will also dip low enough to hit the margin of safety amount. And that's when you go ahead and strike, and you go ahead right in there, and that's the time to purchase that stock. So that's exactly what I'm doing now. So let me show you the exact numbers for Wells Fargo, including the intrinsic value and the margin of safety and the current stock price. Okay, so here are some of the key numbers with evaluating Wells Fargo as it stands today. I want to point out that I have referenced, in this evaluation, I've referenced Rule 1 Investing, Phil Town, as well as another YouTuber named Investing with Tom. So I really appreciate a lot of the insight I've received from your videos. So for Wells Fargo, the earnings per share in the trailing 12 months, and I got some of these numbers from various brokerage sites and as well as Yahoo Finance. So earnings per share trailing 12 months of $4.05. And the growth rate, again, I obtained this from Yahoo Finance. Growth rate of Wells Fargo is at 11% annually. The minimum rate of return that I've determined for myself is I want to achieve a 15% rate of return. And margin of safety, like I mentioned in the graph there, margin of safety of 50%. So the price to earnings ratio, the simple way that I've used price to earnings ratio is multiplying the growth rate times 2, and that gave me a 22. 11 times 2, 22. So I plotted this out on an Excel sheet, and what I did was I put year number 1 and I put it all the way out to year 10. So year number 1, the earnings per share, again, for a trailing 12 months was $4.05. And I extrapolated out using the growth rate. So by the time I got to year 10, it came out to an earnings per share of $10.09. So from there, I wanted to determine at the 10-year mark, what's the price going to be at that time. So the formula is you have your earnings per share, so E, and you multiply that by the price to earnings ratio, and you can remember that from pretty basic arithmetic. Those cancel out and you are left with the price. So when I took the earnings per share at that time and multiplied it by the PE ratio, I got this number. So the theory is that with the current growth rate, that the stock price, the intrinsic value, not really a stock price, rather the intrinsic value of that stock in 10 years should be $222 based on this growth rate. So if you take that and you extrapolate back, again using the Excel spreadsheet, using this minimum rate of return, decreasing it each year just to get us back to year 1, which is now, that number came down to 63.13. So what that's telling me is that the intrinsic value of Wells Fargo today, based on the earnings, based on the growth rate and the minimum rate of return, that's calculated out to be $63.13 as the intrinsic value per share of Wells Fargo. So when I take the margin of safety of 50%, so cut that in half, that comes out to 31.56. So what that's telling me is that if the price, the stock price, is anywhere near 31.56, that means that I am seeing a stock price which is well into the margin of safety and is a really good value for a value investor like me for Wells Fargo. So for the last couple days, the stock has been running in this range, 31, 32. It's going to be in that range over the next few days, I think, and certainly well below the intrinsic value. So because of that, I went ahead and purchased Wells Fargo recently, and I am purchasing more of it, and I'll keep on watching it to see how that price changes. And if it starts going up, then I'm just going to stop buying because it's no longer at the right value. So that's me doing value investing for Wells Fargo. Hope that makes sense. Definitely leave a comment on my method here and tell me what you think. Tell me what you think about Wells Fargo and any other stocks that you're looking at right now. I'd be interested to see what other people are looking at and what kind of intrinsic value as well as a margin of safety you're looking at. So if you like this content, definitely give us a like and subscribe and hit the notification bell for more videos like this and other types of investing videos that will come out every week. So we'll see you on the next video.